Good morning. It's August 9th. Thank you for tuning in for another one of Leverage Monkey's videos. Today we're going to go over just where the market is right now. From what I can see is happening. First, I want to just start off with the past cycle peak here. This is a new chart, so I don't have all the stuff really lined up yet, but basically in this part of the so-called bear market, if Bitcoin was in a bear market, we have this particular process where we go up here, come down, break through that trend line, come right along it, and go down and go into the bear market. That's the trend line there. That's the downward sloping trend line from the all-time high, which was touched here again. So you can see right now, this is pretty much where we are from the past cycle, where we go up, we hit it, we come back down, we break through it for a little while and come back down. So with that said, for the past cycle of what happened, now we go over here and look at this cycle to see what is happening. And if you see, I get my trend line. You can see we did a similar thing. Came up, hit it, came back down, came up, break through. So that's pretty much where we're at there as far as that. So that's just an overview of where we could possibly be right now. What I did notice and what I brought up on Twitter is a possible Wyckoff distribution starting. Last time we didn't see this, so we got, we took some damage, but this time it looks like we're catching it pretty early on, if it is in fact a Wyckoff distribution. As you can see here, the markup began, hits a peak, comes back down, goes back up again, hits a peak, comes back, bounces, and then goes back down. As of right now, we have the rally, the first peak, come back down, and then we're going up and we're making the second peak. So that would put us, pretty much right here, right now. If we were doing the same thing, we would be right here. So right there. This black line is a line I put underneath, and then I cloned it. So I put it here. It has the same angle. As you can see, this one hit the top there. It does line up with some candles, and then I lined it up with the bottom candle. So in particular, if you notice, this peak to this peak, the green lines, this peak to this peak, is about 5.756% is what that peak is from there to there. I'm going on percentages and not dollar amounts because this one, of course, is a bigger distribution with more upthrust This one has already started out smaller. So have to go by percentages and not amounts, or we would be pretty far off. So if we are doing Bitcoin is doing a distribution, we're pretty much close to the top here. There can be wick ups like there was overnight last night. Overnight trading, there is low volume, so it's easy for them to pump it overnight with the low volume. And so far, this whole pump right here, first it started down here at the FTX whale, bought at 32,000 spot. Then perp contracts bought it up to 34. Then we short squeezed all the shorts for $1.2 billion. And then the ones that did held, it came back here. It let them out. A lot of shorts got let out here. Came back up. There was some more shorts here. Or no, here. Wait. I'm on the daily, so I can't really show it. But there were some more shorts here that it came back down and let a big whale out again. And then it came back up. So if you notice on this particular, if you notice on the Wyckoff from before, the Wyckoff from before compared to now, just overnight, we got this part right here. So you see the green candle to the red candle to the green candle. Green candle to the red candle to the green candle. Right there. That's what we got overnight. So it looks like that wick up overnight, according to this, should be the top, this green candle here. So this daily candle is going to probably stay green, but tomorrow it looks like two red down candles. Because again, this is on the daily. So if this was to play the same Wyckoff distribution, looks like Tuesday and Wednesday are going to be red, followed by 2 green days. If you've also noticed, though, this is like a longer distribution. You see how many candles we have from here to here and stuff like that. This one is a lot less candles. So these dailies, so this 2 days might actually be 1 day green candle, a red candle. So this might be one long red candle all the way down. And the spot that it was going to go to, if you look last time from this peak to this bottom here, it retraced right above the 61.8 fib level, and that's where it bounced. And so this one should, if it follows the same pattern and goes to the 61.8, that is right above the 400 approximate level there, where I have the green line in the circle. So that's basically, it would come back down and possibly test this red downtrend line. I tried to zoom in to the 1 hour on the past all-time high, but it wouldn't let me. TradingView wouldn't let me get in for some reason. I kept trying every way I knew how possible to get in. To the 1 hour on there, it wouldn't let me. I don't know if the data is not available or whatever. If someone knows how on Twitter, tell me how, because I would really like to see if this in particular, this basically looking M top on the last one was a distribution as well. I'd like to look at that. I'd really like to see if it was a Wyckoff distribution, but of course I can't because it won't let me zoom into the 1 hourly. But the good thing right now is that for Bitcoin is, I believe, no, I believe that it is resting on top of, let's see, nope. Let me get rid of all of this. Yeah, so the 200-day moving average is 44,981, so almost 4,500. So right now, currently, it's above it, trying to set it as support. So if it can set it as support and resume off of it, then pretty much this will, not be a distribution. But if it breaks down here and goes to the 44,400 level, that's when things will become interesting, because it will be following the same pattern here for the Wyckoff distribution. So if it can hold the 200-day, set it as support here, and resume up, it's possible that the bull market, this was a mid-cycle shakeout, and the bull market will continue. But if it's rejected here, it goes down to the 4,400 level. That is when it brings the Wyckoff accumulation, which is still in play right now. That's when it continues to stay in play. So this is quite a crossroads here. Each time we come to a crossroads and we break through it, it seems like we come to another crossroads, and that's part of technical analysis. And the market's always doing that. The moves are very quick, impulse moves, and then it's like wait and watch for the pattern or whatever the structure to develop. That's what the market does. It only does, accumulation, markup, and distribution and markdown. That's all it does the entire time. There's nothing really else. People say bull market, bear market, rally, sell off. That's all just a bunch of phrases that people really make up, that kind of confuse traders. There's basically just two waves too. There's impulse and there's corrective waves. So there's, and impulsive people think is that it's going up, but that's not necessarily true. Impulsive just means it's going against the overall trend. So an impulsive wave in a bear market is a rally up. A impulse wave in a bull market is a move to the downside. So just like Elliott wave, you'll see the 5 wave pattern, and 1, 2, 1, 3, and 5 are up, and 2 and 4 are the corrective waves. And so yeah, pretty much that's it. I'm watching this. I like to switch to the line, because it helps me to see better. If you notice here, let me put it in a little bit better. If you notice here, that right there, and you notice here right there, if you look at both of them, it stopped there, went down, and then went back up. Exactly what it's supposed to do for this in particular. And if you look at this particular right here, it did the down and back up, same thing, and it did the same here. Let me go ahead and delete this for a second so you can see. So it came up it came up, came down, went up, came up, came down, went up, came up, went down, went up, came up, went down, went up. So right now in the Wyckoff, looks like we're working on the second peak. 1, 2, 1, 2. Next is the decline to the 40, 500 level, 4400 level. And then it would go up to here, which should be about the 48 level. So let's see, I have enough time. Switch it back. Well, so let's see. If I go here, so it looks like 4% higher is going to be the next one. So let's see. If we go from here, 4% higher, about 4% higher is 47,300. So it looks like the next peak after we'd come down to the 4,500, the next peak would be 47,250, 47,400. So it would be right here somewhere. So we'll buy here. This will come down here. We'll buy there, and then we'll sell there and go short. That's pretty much what it would be if it's doing the same pattern, coming down here, going up there. That's pretty much what it would be. So yeah, that's my analysis. I'm running out of time. These things only give me 20 minutes to ramble on like a crazy person. Everybody on the internet probably thinks I'm crazy by now, but I like making money. I like this game. It's a fun game. It's the whales game. You need to respect the whales. They're the whales. But this is all right here. All FTX, Tether, ignition momentum, algorithms with spoofing contracts, and all perp contracts, and basically there is some spot in there, quite a bit of spot, and then also a bunch of whales did bring their coins off the exchange, so that has helped the rally as well, but it's a lot of manipulation, and of course as I speak, Bitcoin is taking off above the green line, above here. Now, these percentages really, for here to here, these percentages that I'm grabbing and using here, they're also somewhat for reference. Because if you look at this candle here where the red is to the up candle, there's quite a distance. And here, our little red candle here, we don't have much distance yet. So this could end up going higher and still be part of the structure. The whole structure part of it is going to possibly remain the same, where it does, this whole thing, compared to this. So that part of the zigzag structure that the Wyckoff accumulation does, distribution does, is going to stay the same, but the heights may be different. But of course, I'm out of time, 20 seconds. So thank you for watching, guys. This is my update for now. Leverage Monkey on Twitter. If you're not following or subscribing, follow, subscribe on YouTube, Twitter. Thank you and have a great day. And I'll update you if I notice anything else. Thank you. Bye.